have like an agenda.
I think Annalie, Nima, and you can coordinate it. I'm ready to answer whatever question comes my way.
Good.
All right, that's good.
My only suggestion is that let this be a constructive session. No fighting. No.
Yes.
On the. Yeah, I mean, let it be a very peaceful and an informative session rather than, because I just fear that some people might just come in to disturb the show.
I know, but I will just mute people so they can talk, so it won't be a problem.
Yeah, because this is an important for us. It is important to know what's going on and what should be there. So it should be informative rather than
Yeah, exactly. I can say right now then that if you have questions, you can. There's a chat window, and for those who have a question, just write it in there, and we will address it as soon as.
Absolutely. So how have you been spending your weekends, Nima?
Just out in the sun with friends. It's been great, actually. Here in Gothenburg, at least. How about yourself?
Gold prices are going up. Gold prices are looking extremely nice.
Yeah.
I had some guests over. They come from Berlin, so I just left them out.
Huh?
I was supposed to lead them to the airport, but it would have been logistically quite inconvenient to do the webinar. So I just told them that this was important.
Okay. All right, I understand.
So I think Annalie and Nima, I think between the two, whatever webinars that we're having, the objective should be to get the shareholders up to date.
Yeah.
Okay.
Yes.
Those questions are quite valid. I just think that the shareholders today do not have the kind of information to make that decision.
Yes, one analysis is that shareholders are kept in the dark, and therefore they cannot make a decision because they don't have
but also
data.
It's been very clear that, you see, I will be extremely, I will balance out the kind of information that I can get. For example, I think that I don't know, I have to ask Frederick. So I don't know whether I can give those documents away, but I've given a reflection of more of my analysis. So it is okay.
Yes.
So I'll just ask Frederick tomorrow, and well, ideally speaking, it should be coming from the board, not from me. Right?
Yes.
So,
but we will also have other webinars. So if there's that information will be present later.
So. But my paper to you, Annalie, and a couple of others, I think I have already analyzed it in a very brief.
Yes.
What the things are all about.
We will still give it a few more minutes for people.
Yeah.
Awesome.
I'm at your disposal. Annalie, you be there. I mean, I'm 100. So you can attend to your kids, but just be there. Okay.
Yes, I will. I'm spending most of the time mute because I have my kids and I'm trying to get them some dinner. A suggestion for an outline for this session would be maybe a few minutes to just present the history, and then some few minutes for the future, and then after questions. So we just have a summary of where we are and why and where we want to go.
Yeah, because I think that all of us have already had some webinar sessions earlier on. So I think what we need to do is we need to at least fill up the gap from there and until now. And
yes.
Yeah. Yeah. Nima, have you been in touch with the board? I know that Annalie has been. Have you been in touch with the board?
I spoke to Frederick a few days back.
Mm-hmm.
And yeah, I've been emailing, but I don't know. Nima, are you there?
I'm here now, sorry. Yes.
Oh, sorry. Yes. So it's 1800. Should we execute this session?
Yeah, we can start now. We have a lot of people inside now, so it's fine. And I'm also recording this just in case we can put it up later for people, so it won't be a problem.
Yeah. Good.
Please.
So I think that it would be very good to just spend a few minutes on the history and the future, and then take all the questions from the listeners.
Yeah.
I will be on mute.
Mm.
Okay.
Yeah, me too. I'll also be on mute, but I'll still hear.
Mm-hmm.
Yeah. So you can begin when you want.
So Nima, tell me when to speak. I will start.
You can start now if you want.
Okay. So welcome all the fellow shareholders. I don't know how many of them are over here, but
excuse me, Panda.
Yeah.
Oh.
Yeah, is it possible that you can turn on the camera? You don't have to if you don't
There
want,
won't be any camera this time.
Well, I don't have any problems doing anything. It's just that I just need to be comfortable with all this webinar control panels on my lap. What do I do? I'll go to webcam and references, is it?
No, Pranay, there is no camera for this session, but we could arrange that for another one in the future.
Yeah. Oh, okay.
Yes.
I'm so sorry.
Okay, please continue.
Okay, cool.
There are 28 people on the line too.
Okay, cool. So just stop me wherever I have to stop, and I can take whatever questions come my way. I think that I don't know how many of you all have attended the annual general meeting, but in the annual general meeting there was a presentation that was given by, which in a sense was a presentation which the idea and the concept of the presentation was not mine. It was actually the last chairman's, Vinod Sethi's idea that, Pranay, why don't you explore the idea of, rights issue and fire steel resources deal coexisting with each other, okay, in some ways or the other. Okay, and if that presentation is in the public domain, I think that you would see that there was an effort that was made to coexist the deal in some ways or the other, because in simple words, I think what I was trying to do is trying to essentially, do the make the board happy, get along with the deal, and I believe that there was some sense in the coexistence of the model. But again, stress that it was not my idea, it was the idea of Vinod Sethi. And that was done because I think that when we chatted with FTR, and I think all the shareholders have the same information as anybody else has, the deal was 5149, and all of that. I think all of you guys know whatever is there on the public site is on the public site. But then, just to cut the long story short, I had received an email from Fire Steel suggesting that whether I would be okay with a 51-49 joint venture. Now, earlier it was 60-40, and he was suggesting whether we could do a 51-49 joint venture. And a joint venture, I was slightly suspicious. Suspicious is the right word. Suspicious of the fact whether the word joint venture was being used in the right way or not, because joint venture has very deep legal meaning. Okay, it's not the same as investment. Joint venture deals with a separate legal structure. It has got entry-exit clauses, lots of things. So, and he suggested a 51-49, and he said that we can do rights. You guys can do rights, and we can do this 51-49 JV. Now, at the very offset, there was, as everybody also knows, that we have a historical issue of Section 2.8 or what have you with NASDAQ, which simply says that if there are drastic changes in the company structure and the management and the board, etc., there could be a risk, okay, in terms of the company having to apply for a fresh listing. Till date, at least I do not know what is happening on that scene. There has been no response from NASDAQ. I think that they would be waiting for some clarity on how the rights issue is going to be executed, whether the shareholders are going for FTR, the shareholders are going for rights. I think some clarity they should be waiting for, and once that clarity is on the table, they might take a decision, whatever deems fit to them. But until then, I guess we have to wait. Okay, so far so good. So I had to go to Bombay, and I met up Fire Steel Resources along with Vinod Sethi, and the reason why I went to meet with them, because frankly speaking, as an investor and as a large investor into Nordic Mines, I could not find the deep logic behind Section 2.8, and I thought that Section 2.8 was indeed a clause which might not enable me to be fair with all the shareholders for executing the rights issue, because there are delisting issues. The company would be in the private domain, and then we will relist it and all of that. So it's a completely different journey altogether. And what we were discussing on the rights issue, basically the counter deal, which went in parallel to the FTR deal, was before the Section 2.8, and after Section 2.8, the consequences and repercussions are slightly different. So, there was indeed a situation where the company had run out of cash, and so I had to go and talk with them in the interests of all the shareholders, including my shares. Okay? And there was some kind of a memorandum of understanding. I said, I specifically some kind of a memorandum of understanding. This is a one-pager memorandum of understanding that we reached, which said that, okay, so we will arrange, something like $15 million. We will take 51% equity, and there will be a JV agreement that will get signed, and post that, So that was it, and it was also kind of agreed upon that we are open to do a rights issue as well. Now, what does that mean? And and since I've given you the background, I spoke to the last chairman. I said that let's get down to specifics. So on the one hand, FTR agrees with the fact that we should do our rights. Fair enough. Okay. On the other hand, he agrees to the fact that you want to do a 51-49. How can that possibly exist? Because if I do my rights, which is in a different company called Nomi, and if somebody does an FTR deal, which is in a different company called Nordic Mines Maknad. Okay? So legally speaking, there are two different companies over here that we're dealing with. So if I do the rights in the group company, okay, say we are doing the rights size is about $6 million. Right? So assume that the rights are successful. So, and thus $6 million cash comes into the group company. All right. So I asked FTR and Vinod Sethi that if $6 million comes into the rights issue, okay, in the group company, okay, today the stock price is at 0.285 SEK, reflecting about $21, $22 million, right? Okay, so if you successfully complete the rights, you'll have cash in the company, and the market capitalization of the company will increase. It will increase to the range of 0.50 to 0.0660 SEK mathematically, no rocket science, right? So, so in which case, since Nordic Mines Marknad is 100% subsidiary of Nordic Mines, the valuation of Nordic Mines Marknad will go up. It will not be at 0.285. So presumably, if at all I have $6 million cash, and if the shareholders give approval of investing into that joint venture, so Nomi invests $6 million into the joint venture, as a result of which our holding is 75% and FTR's holding is 25%, because you're putting cash in as well, apart from the assets. Will that be agreeable? Okay, and somewhere down the line, I was not in direct touch with FTR at all. It was through Mr. Sethi, and he said that yeah, he should be okay with it. Okay, and apparently he was not okay with it. All right, so if he's not okay with the fact that we raise $6 million and put our money into the joint venture, as a consequence of which our shareholding goes up, that is Nordic Mines shareholding goes up, then how can you do the rights issue? So why do you say that you agree with the fact that you should do the rights issue? Because the basic purpose of the rights issue is to increase the valuation of the company from the current point to the next orbit, to 0.50, 0.60. So, you know, that becomes an expensive affair for FTR, because if at all we invest the money into Nordic Mines Marknad, naturally our holding is about 75 to 80%, and his holding about 25 to 20%. And I spoke to FTR, and I think he was quite reasonable. And I spoke to him that, are you okay? He says, you know, no, because I will not be too 80-20 or 75-25. It's not going to motivate us. So fine, that's your call. That's an investor's call. I mean, but then why did you ever say that you are agreeable to us doing rights? I mean, so what do I do with that $6 million? $6 million. Okay, I mean, I have an option of investing it into another mine, or I have an option to invest in joint venture. It is basically the decision of the shareholders. Okay, you don't have a call on that. So if I prefer to put it in the joint venture, how can you stop me getting 75%? Because I'm putting money in as well, right? So cutting the long chase short, okay, I think that was nonsense. There was no, in spirit, I don't think so, anybody wanted us to execute the rights issue, because rights issue would always increase the market value of the company. And if the market value of the company increases, okay, it would be difficult for FTR to do this deal as such. Okay, so I think, and that's where we are even today. That's where we are even today. Okay, I was in the last board meet, I was asked as a shareholder by one of the board members that, would you like to coexist? Okay, and I said that, with what confidence are you saying that? Because we have already tried that, it hasn't worked. And it will not work. And of course, I think the last I spoke to the chairman also said that the coexistence model will not work. And I knew it all along that it will not work, because rights issue increases the market cap. It is so simple to understand. And there will be pitfalls on the road. Okay, every single reason will be brought onto the table for not doing the rights issue, because I just think that it increases the entry barrier for FTR to do the deal. So my question is that, why should I be prohibited or discouraged, okay, to protect my rights in the rights issue? And if it increases the market value of the company, it's good for all the shareholders. Okay, well, in this case, not doing the rights benefits FTR. It's as simple as that. Okay, So where are we today? Okay, we are at the same spot. Okay, and I think what has happened is two very important points. If anybody has tried his level best to do the FTR deal in a fair and square way, it is me. Okay, and I think that more than anything else, okay, or anybody else, I believe the last chairman and Vinod Sethi will acknowledge it. Okay, I have tried my umpteen best, okay, to try to figure out some way as to how to accommodate this guy into the deal. Okay, but whichever solution that I and Vinod Sethi brought onto the table was invariably rejected for one reason or the other. Okay, now important points. Okay, after this MOU was signed, okay, and this was a legally non-binding MOU for very clear reasons. Okay, the MOU suggested that we would be signing a joint venture agreement. Okay, and the joint venture agreement was a good, 10, 11, 12 pages agreement. Okay, and that agreement, well, nobody had read that agreement, so as to say. I mean, well, literally nobody from the last board had read that agreement. Nobody from the present board had read that agreement. And it was left again upon me to read that agreement, okay, and get a legal opinion on that agreement and what have you. And I think that some of the lawyers, legal firms were not ready to work with Nordic Mines because Nordic Mines had not paid the fees up and so on and so forth. So we were without a legal opinion on that agreement. But again, I won't name the lawyer, but I used my good offices to get a lawyer, and we went through the agreement. And what was shocking to us, okay, is I say shocking because some of the points that I'm going to mention to you was already mentioned to the board some time back, before even the FTR deal was at very initial stages. Okay, I had warned them that, please be very clear that the deal structure should not end up, okay, at a level which gets reflected as to what I'm going to say in the in the joint venture agreement. So what was negotiated with Fire Steel by Vinod Sethi, okay, and the last CEO, which is Saradhi Rajan, was an equity interest of something like $15 million for 51% of the company. Okay, mark my words, equity, risk money. Risk money will come in and he will get 51%, etc., etc., etc. That is the reason why Nordic Mines shares were priced at 0.285 SEK after the Fire Steel deal was announced. If anybody does simple maths, he will come down to the same figure of 0.285 SEK if and only if FTR deal is done in NOMI and not in Nordic Mines Smocknod. I think the market has assumed that the deal will be done in NOMI and not in Nordic Mines Smocknod. Okay, I think there is so you were priced at 0.285 SEK, right? The joint venture agreement, okay, very seriously suggested not to be the case, because what he was trying to say is that no, my monies, okay, of $50 million is going to come down by pledging the asset. It's not risk money, it is pledging the asset. It's pledging the entire of Nordic Mines Smocknod, getting a financing done, and it's a debt deal. Okay, it's not an equity deal. So what I will do is I will pledge the asset. Okay, I will raise up the money, and that money will be my equity of 51%. And I spoke to Vinod. I said, that is this what you had agreed upon? And Sethi said, no, this was not what we agreed. It was categorically told to FTR that he has to put equity money. And this is in writing to me, okay, from the chairman, last chairman, okay, who said that. And even, writing is one thing. I mean, I had, there are email correspondences where I had warned the board once too often, even before the FTR deal could have been announced, that, hey, okay, fine. So, equity deal is good, but don't get into a scenario where you have to pledge the entire asset, okay, off. And he finances his equity, okay, with our asset, okay, I mean, which is, nonsense. An email was also written to FTR before he could even give the JV agreement, that, okay, I'm just telling you that this should not be that, because I had my doubts, okay, that how could anybody put $15 million as equity and take 51%? I mean, I had my doubts, because I've been in the financing part of the business. I know this mine quite well, okay. I doubt whether, somebody will pick up $15 million equity and put it at, for 51%. So I had my doubts. So I had already given an email to him saying that, I have my doubts. So it's just that be careful that don't produce anything which is on lines of what I'm talking. So again, cutting the long story short, this was what the JV agreement was. Okay, it had a clause which said security of Nordic Mines Maknad. Okay, that is, it should be pledged. Okay, now, if I spoke to Sethi, I said, and Sethi said that, no, I think we should remove that clause from the JV agreement. I said, if I remove that clause, Sethi, okay, 70 to 80% of the agreement is invalid. So out of the 12, 13 pages, 9 pages get out. Only 3 pages remain. So, and I spoke to Michael Hepworth saying that, hey, have you agreed to this? Okay, is this what was the agreement with Sethi? And there wasn't a very clear reply, and so on and so forth. But I had a very clear reply from Sethi that we can't do this deal, because that was not what was understood. What was understood is that he puts equity money into the game. All right. So that was disturbance number 1 in terms of expectations. Okay. And disturbance number 2, okay, was eventually when the new board came in, until about a month back, or not month back, I think about a couple of weeks back, we got a financing agreement from a firm called Pandion Financing. Okay, and that was another 10-11 pages of financing agreement. And if you see that financing agreement, okay, it is even worse off than what the JV agreement suggested. The JV agreement said that we will pledge your assets. Okay, Pandion Finance agreement suggests that we will not only pledge your assets, but we will take about, we will take about 38 to 40% of your revenues off. In simple words, it's a gold offtake agreement which says that in total 1,937 kilos, to be precise, and I've done this calculation many times over now. 1,937 kilos to something like $79.5 million as per today's gold price of $41,000 per kg, and about at an average per, and it's a deal spread over 40 months, with the estimation that gold is going to be produced in January 2019. That's what the paper suggests. Okay, so the 6 months of gold production and all of that, that is not what the paper is suggesting. The paper is suggesting that the first gold offtake will happen in January 2019. And the deal with Pandion Finance is from January 2019 to I think something like to April 2022. And if I calculate, it comes to about 40 months, and the total offtake commitment to Pandion Finance is 1,937 kilos of gold at 15% discount. Okay, which essentially gets the deal to, simple maths would say that 38% of the cash flows, okay, of Nordic Mines is pledged. Okay, as if that is not sufficient, if Nordic Mines fails to deliver that, okay, the second level security interest is 100% pledging of Nordic Mines Marknord and practically all the shares of Nordic Mines as well. Okay, so so that is the second level interest. As if that is not sufficient, that it is covered by FTR putting $0.8 million, 0.8 or $0.85 million, and taking 60% of the company. That's what the deal is. The deal is, in simple words, FTR puts $0.85 million and takes 60% of the company for arranging a loan of $15 million US, which is pledged against 38% of the revenues of Nordic Mines every year for 40 months. Okay, and so that's it. So the way I see is the only role that FTR is playing is a middleman, that, you know, I'm arranging a loan for you, so please give me 60%. And what is your risk? My risk is $0.8 million. That's what the deal is. Now, if I start putting those numbers, okay, into you know, what should be the value of the share, what should be the market capitalization, what should be the enterprise value, all of that. Just take the FTR deal and put it into what should be the enterprise value, what should be the value of equity, and so on and so forth. I'm just getting a feeling that it's the market sooner or later will see it to be a bankrupt deal. It will see it to be a deal where there is no value to the equity. I mean, where is the value to the equity when somebody has put $0.8 million and he is taking 60% of the company for arranging a $15 million loan against a pledging of 38% of the cash flows of Nordic Mines? I mean, how difficult can that be to digest? And these are factual details. Okay, so according to me, the worst case scenario is bankruptcy. Fair enough. Everybody can understand that. I think that the FTR deal is nothing but buying some time before the company goes bankrupt. So the difference is just, okay, fine. So, you know, maybe there'll be some value to the company. I mean, if $0.8 million for 60% of the company is, to me, about $1.33 million of market capitalization, I just think that it is not even a deal for anybody, at least for me, okay, to be spending even 5 minutes on it. Okay. Now, I have spoken to FTR. Okay, I have told them also very categorically that there are some ways and means as to how you can do this deal. And he accepted some of the points that I had made. But whilst doing that, I never saw the Pandion finance agreement. Okay, when the Pandion finance agreement came in, it simply told me that, you know, my 22%, which is in the company, is not valued in anything. It's practically valued at nothing. Okay, so I gave him a call. I told him that there a way wherein you can minimum guarantee the market capitalization of Nordic Mines. You should, if you think that you are ready to buy back all the shares, why don't you just give a minimum guarantee? I mean, minimum guarantee could be, if you think, today's price is 0.20, which is $25 million, at least give a guarantee, a bank guarantee, a financing guarantee that you're going to buy this off. Okay. I think that's exactly what even Fredrik was trying. And I think that's not, he has rejected that as well. Okay. So I think that today, as we speak individually, I can speak for my 22%. I think, in my opinion, which I think rights is the only option. There is no other option. This is the only option that we have. And it's the only option that we have for the simple reason that it gets the company back into shape, okay, by being fair with all the shareholders and the valuation of the company, number one. And number two, I've said that the rights issue will be a demerger driven issue, and the demerger driven issue is already placed in front of the board, okay. And in my view, and I've been maintaining this view right from day one, ever since I became a shareholder of Nordic Mines, okay. I said that it's not after FTR, it is right from day one, right from 23rd November 2015, that demerger, in my opinion, is the only way of saving this company. Okay, I don't know whether anybody understands this simple fact that the economics of the processing plant is different from the economics of the mine. To combine the two economics is doomed for failure. You need to separate the two economics out. It's a simple thing. You might call it demerger, spinning off, outsourcing, give it whatever name you want to give it. At the end of the day, it is simplistically phrased as taking out the cost of the processing plant from the books of Nordic Mines. Anybody can do that, whether it is Lao Tzu or any other investor who can do that, will save the mine. And save the mine in a good way. Because once you do that, then the true valuation of the company comes out. And in my view, I've already given a clear indication to the board in my note that this demerger exercise is not something which has been cooked up by Pranay Panda out of his hat. It is a very well analyzed deal, in which case there is, I've also got listed benchmark examples of gold mines which are listed in Toronto Stock Exchange, the size of which is exactly similar to Nordic Mines. Their processing plant processes something like 1,900 kilos of gold, and it is valued at $72 million, 60 to 72 at 1 Swedish kroners, only the processing plant. It's listed in TSX today, same size as that of Nordic Mines. So if I demerge the processing plant, and if I process only Nordic Mines gold, okay, why shouldn't I be valued at 1 Swedish kroner? Only the processing plant. And which basically leaves the mining business standalone on its own 2 feet. By taking out the cost of processing from the mining business, okay, the resultant mining cost, okay, would be something like $500 to $600 an ounce. Yes, I will be selling there will be a discounting in the revenues, but the margins will be towards about, Torbjörn Bigden calculated it, that the return on equity is much higher than if at all you don't demerge, right? So I think that the numbers are also given to the board. I now fail to realize why, okay, is there a objection to demerger. There is really no scientific reason that has been given to me. Not even one reason. I've been craving and struggling and begging to have anybody come down, okay, and tell me why. What is the reason why you should not do a demerger? Okay, it isn't as if there is only one benchmark example in the mining industry, the oil and gas industry, the aluminum industry, where in the oil and gas industry, there are 6 examples of Fortune 100 companies: Shell, British Petroleum, ConocoPhillips, okay, Marathon Oil. Okay, all these guys from 2012 to 2015 have done demergers, And in each of the cases, the share prices have doubled. Not 30%, 40%. The calculation that I've given to the board is an average of 87%. So Nordic Mines is a very small asset. Demerger is not a very complicated exercise at all. It is being made to be complicated for whatever reason. Okay. So that's where I'm 100% confident that if at all we do the demerger exercise smoothly and succeed in the rights issue implementation, we will be out of the woods. And the demerger is the right approach to go and take towards bringing the mine back to where it belongs. Okay. So that is where I will stop, and I will take questions because I'm committed. Please try to understand that, you know, I'm not doing the rights issue on demerger without putting my own neck on the chopping block. I've already mentioned that I will be giving my commitments to a subscription of the shares, and I'll be backing the demerger with financial capital. Right. So it is backed with conviction. And if I were to have even 5 minutes of confidence on the Fire Steel deal, I would have taken it. Okay, I know the amount of management time that I have spent very sincerely and very honestly to get the FTR deal on the table. But I see there is absolutely no route where I can see that the FTR deal can in any way reward the shareholders better than rights. Okay, there is no escape. If somebody can find out, please let me know. I am also a shareholder, as everybody of you all are, and I think if anybody can educate me as to why should I agree to FTR, I'll be very happy to listen to that. Well, also one more point. When it was 51-49 direct equity, still I was struggling to understand why should it be better than rights. I'm now with this gold offtake, so-called loan debt agreement and what have you. My feeling is that it is even worse off than when he had interacted with us, and today I feel that, I don't know how others feel, at least I feel that my shares value will go to zero. I mean, it is treated as it is zero. Forget everything else. It is treated as it is zero. I don't think so that with the current numbers that appear on the paper, the papers are not valuing Nordic Mines even at 0.285 SEK. It's much, much lower than that.
Okay. So here's what we will do. First off, Anneli, do you have something you want to add or anything?
No, that was a good summary. One of the questions that is floating around the most is the question of the dual listing.
There is, one second, just Basil Botha, to be very transparent the Swedish way, Basil Botha has written to me, I think he's there on this.
He's in the chat as well, yeah.
Yes, he has written, give us the specifics of which gold company it is on Toronto Stock Exchange. And then he has written, don't confuse and use oil and gas as an example. Okay, I'll take, so I will, I will,
that.
So, are there any other questions before I can ask?
No, address Basil Botha's questions first, and then I will take it from there.
Yeah, good.
No, but what should I address? Give us the specifics of which gold company it is on the TSX. The specifics of the gold company on TSX has already been presented to the board.
I mean,
has already been officially presented to the board. Has already been officially, I think, if the board hasn't made the presentation public, then it is a different this thing. Basil, gold company, when it has been presented, okay, the name has been in the presentation, Basil, very transparently. I have mentioned that I'm keeping the name confidential. All the financials of the company, the listing of the company, the financial details, the operating history, everything has been given. Okay, so I, for confidential reasons, cannot give the name of the company, but I'm pretty much sure that your analysts can go down and figure out from the very obvious financial details that I've given as to which company that I'm talking about. Yes, it's a public company. There are no secrets, correct? But on the other hand, I also think that somewhere down the level, I think that enough information has been given to the board and the public to figure out what company that is. And if you can't figure that out, then it is your problem and not mine. Okay.
Yeah, and also,
okay. Yeah, and the second question is that don't confuse on the oil and gas. I mean, first of all, the words that you're using, don't confuse. I mean, benchmark studies and benchmark examples are either what we say as micro benchmarks and macro benchmarks. On the micro benchmark, there is a gold company. On macro benchmarks, there is the oil and gas and aluminum industries. Alcoa has done it. 5 or 6 oil and gas companies have done it, and they have done it for very simple and very clear financial reasons. Okay, so. Yes, it is. It is not apples and oranges. It might be apples and plums as far as oil and gas industry is concerned, and it's pretty much apples to apples as far as the gold industry is concerned.
Okay, that's good.
Yeah.
All right, Anneli, continue, please.
My question is revolving the dual listing.
Basil, according to me, apples and oranges would be debt and equity. $15 million or 51% direct equity to me is apples, and $0.8 million for 60% equity, and everything else is debt is very rotten eggs and not even oranges.
Okay. But we leave that behind now. Continue, please, Anneli.
Yes, one of the questions that is quite often mentioned is the dual listing, the structure behind, and how and where and when we will be listed if we leave NASDAQ.
No, okay. So, I am not in a position to essentially comment anything on NASDAQ's decision, because I am essentially in the same position as anybody else as a shareholder is. I really do not know what NASDAQ's decision will be. All right. So I have asked the board, and I believe the board also is equally indecisive. Or so NASDAQ is NASDAQ. I mean, so I do not know whether where NASDAQ is coming from. I can only assume and give some probabilistic assumptions, and some of the probabilistic assumptions that I can make is the fact that perhaps they're waiting for clarity as to whether are we doing rights, and if they're doing rights, what is the model that we are trying to get into as far as rights is concerned. Okay, is it an underwritten model, a non-underwritten model, a secured model, not a secured model? Perhaps we can also, give 19,037 kilos of gold to all the shareholders and raise $12 million, and all of that. Okay, so they don't know what's the final decision that the board has taken, and I guess that now I can only assume that if the rights issue is successful in the way it should be, and I'm pretty confident it will be, I assume that this is my assumption, that why should NASDAQ delist us, right? And if NASDAQ will not delist us, then I have no reason to do any dual listing or anything of that sort. I mean, demerger, 2 listed companies can exist in NASDAQ OMX like it were. It is only that I'm talking about a fresh listing in another exchange, given the scenario that NASDAQ probably decides to delist us. And if so, then we have to list the company elsewhere. And in my view, I think in my view, I think the demerger exercise will give rise to two companies, and it'll be a 1:1 demerger. So every shareholder of Nordic Mines today will have one share of the mining company and one share of the processing plant company. So to begin with, every share, today's shareholder in Nomi will have, will be 100% in the mining company and also 100% in the processing plant company. And both the companies will have different fund-raising strategy profiles. Okay, because a mining company will essentially attract a different set of investor, and a processing plant company will attract another set of investors. All right. Okay. Now, when it comes to dual listing, dual listing is the wrong technical phrase to use. It is not dual listing. You do dual listing of one company which is listed in multiple stock exchanges. Okay. These are two different companies. Okay, and I think, in my opinion, and this is an analytical fact, that I think after demerger, the pro forma numbers that are coming out on paper for the mining business, okay, I think that anything to do with the Indian market, wherein the gold consumption in the Indian market is it's one of the highest consuming markets. Okay, and I've done some benchmark studies in the Indian market, and I believe that today, as we speak, half the size of Nordic Mines, there are some gold mining companies which are quoting at 2 times or 3 times more than the valuation of Nordic Mines. For me, it is not whether it is Bombay Stock Exchange or whether it is NASDAQ or whether it is Dubai Stock Exchange. For me, it is to figure out how you get the Indian market to get involved in the Nordic Mines business, so as to say. So from that perspective, if the question is that, how will we trade in BSE and this and that? Okay, I think that first of all, if NASDAQ delists us, then it is it'll be my preference to be either listed in NASDAQ Dubai or Bombay Stock Exchange. All right, I agree to some shareholder concerns that whilst the company is listed in if the company is listed in BSE, I think that there are certain regulatory hassles with the Indian market. But typically what you do is that you also parallelly list depository receipts, which are basically called global depository receipts. Okay, and those depository receipts can be listed either in NASDAQ, Finnish Stock Exchange, Norwegian Stock Exchange, Luxembourg. That's not a big deal. All right, so these GDRs, depository receipts, they behave as any tradable security. So all the Nordic shareholders can trade their shares like they were in the form of GDRs. Right, so there's no big deal. But my sense is that I believe NASDAQ Dubai is a lot easier, because first of all, you're shifting from one sister concern to the other, and secondly, in NASDAQ Dubai, you would be essentially trading your shares like you were doing today. So my preference will be, if NASDAQ OMX Sweden delists us, then we will try to get listed in NASDAQ Dubai. All right, and that's our first preference. And there will be no difference in the valuation benchmarks or target valuations that I have in my mind, because the guys will be underwriting the IPO will be the same investors coming from the Indian market. For for the listeners, there is virtually no difference between the Indian gold market and the Dubai gold market, because the guys controlling the players in the Indian market are the same players in the Dubai market. The India-Dubai trading corridor is controlled by the Indians. So every big daddy, okay, who's there in India also has a presence in Dubai. So that's no big deal. So that answers your first question. It is not dual listing. It is separate listing or separate two companies, because I feel that the mining business will indeed, okay, have a better valuation in these markets, because you are discounting, okay, a better future, just for shareholders' interests. You see, typically Europe would discount something like 3 years of future, all right? Whereas in markets which have a huge consumable population, the future discounting is towards 8 to 10 years. Okay, just because of that, you would probably get a better valuation. Coming down to the processing plant company. Okay, a processing plant company, in my view, would be a bond type company. It'll be like something like a trading balance sheet, right? For a trading balance sheet, I think that the valuation multiples, which is close to around about 0.4 times the top line, right? I think the typical valuation multiples will be better achieved outside of Dubai or India. So in my opinion, and there's no reason that I should be incorrect on this, is that the processing plant company is better off being listed either in Nasdaq or in Finnish Stock Exchange or in Norwegian Stock Exchange or Luxembourg Stock Exchange, basically in Europe, right? So that answers the question. But I think before we even go down to a fresh listing formula, I think all of us, including me, I think we all require clarity from Nasdaq as to what Nasdaq's decision is. Because if Nasdaq's decision indeed is that, okay, you guys have been successful with your rights issue, you've got liquidity, you've got a plan, so fine. So we will not delist and go ahead. So there's no reason to go out of Nasdaq.
All right. Anneli, do you have anything else to add?
There is 1 second. Written replies that are coming down. Okay, so should I read those written replies or what? I mean, how do we do this?
Yes, do that.
Okay.
Yeah. So there is Belinda, okay, and she says that I spoke to Michael Heffuk and he said that the financing is 100% on Fire Steel and not on Nordic. He also said that the only security pledge is the FTR shares. Melinda, I think that is the reason why, first of all, the statement according to the papers is incorrect. So rather than I saying anything and you writing something, I think that those papers should be published to everybody. Don't, I mean, it's a very fair request. Those papers are with me. They do not reflect what you are stating. No ways.
Do you know why the board hasn't released the FTR agreement or the deal in public?
I don't know. See, firstly, Anneli, it is a very wrong question to ask me, and I don't think so. Though I have some answers from the board, I mean, I'm not over here to represent you. You should be asking the board. I'm as good as a shareholder as you are. It's just that I probably hold some more shares than you.
Yeah, believe me, Pranay, I've asked 100 times. The answer is no. You don't need to see it. Was the last answer I got. Yeah, you don't need to see it.
but then they should be having their own reasons.
Yes, they should present a reason better than you don't need to see it.
And I think there are 4 or 5 people in the board, and half of them are lawyers. So I'm quite clear that they are legally correct in not doing so. I just think that a lot of this debate that we are having on FTR debt and equity, and I have the papers with me, and I think there was one lady who has. It is I mean, blatantly, and I know that it's a bloody idiotic deal. I mean, as a shareholder, I will spit on those papers. Literally speaking, it's a disrespect to all the shareholders. It's a disrespect to all the shareholders. And I think those papers should be published. Those papers should be published. And it is not my business to answer why are those papers. Those papers should be published. This is my opinion. The papers should be published.
Yes, the thing is that the board has made some decisions to keep things secret, and that gives us a very difficult time to make up our mind, because we are basically making a decision based on secondhand stories. And I have asked for these documents for a very long time, numerous times, to the old board and the new board, and I don't get any answers.
So, what I can say for everybody's, I think what everybody can take home is, if Michael Botha and Michael Hepworth and whosoever can tell me that this is the JV agreement and this is the Pandion Finance agreement, this is the input that we have to Nordic Mines, and the output in terms of valuation today will be XYZ, whatever it is. I think I would like to believe that my subject is finance. I think I would also like to believe that I'm not a miner, but I also would like to believe that nobody teach me my subject of finance. I don't understand. I mean, I just think that the derivation of these papers in terms of actually valuing the asset is so miserable. Okay, that what I've been asking the board is, what is going on? I mean, have you read the papers? And well, you should ask. I think the shareholders should ask the board. I have asked the board. I mean, I have asked the board that please make those papers public. I have asked them. That officially I can tell you. I have asked them. So I've done my duties. I've said that you should make those papers public. FTR can make those papers public. Michael Botha is there. Why don't you ask Michael Botha to make it public?
Good question.
Yes, he's there. He's there on the webinar. Tell him to make it public.
Yes. I think we all know that if the documents are made public, we will see through it, and we will see that that's a lousy deal.
Yeah, I'll tell you where the problem will come. Okay, the problem will come in that probably a matured person who understands deal making will probably see it in 1 hour. Probably the small shareholder will read it over 3 or 4 days. Okay. Legally speaking, you know, I think that the shareholder should be given at least a month or a couple of months to absorb those papers before taking a decision. I mean, so I think those papers should be made public ASAP, as a Monday basis. Tomorrow the papers should be published, and if the board is not giving it, I think Basil and Michael should make those papers public. They should ask Mines.
Yes.
They should make it public on their website.
Yes.
Panda, can I ask you a question?
Please.
You know that I wrote to you earlier today a question, and maybe you can tell it to everyone else, because I think it's a good question, and I think many are wondering about how much of a value in the live mine is economical, measurable according to that.
I think, Håkan, that was well, you said that, sorry for us. I think what Håkan asked was, what are the economical reserves of the mine? Okay, and trust me, guys, and we are all in the same boat. I think before you even get on to doing rights or the FTR deal or a Bill Gates deal, whatever, I think we all should ask that question to ourselves: what is the economical reserves today? Because that statement has not been officially made by either the earlier board, and I'm sure that the present board does not have the numbers, or does not. I don't think so. They are in the position to do that. But it hasn't been made very clear by the earlier board as well, by the earlier management as well. All right. I think there was, okay, so let me just take that question, because that is according to me as an investor, that's the most important question to ask. Okay. Rather than even getting into, where the company is getting delisted, whether we will be listed in NASDAQ or not, what is the rights issue, what is the FTR deal. I think the most basic question is that if there is gold in the mine, what are the economical reserves? And as an investor, at least I have a hunch on it, but there is no official data that has come out on the website, right? Okay. So let me take you down to, the earlier management days, which was headed by Legacy Hill Resources and by objectively, you see what we did was, and I was in the board as well, so I know quite a bit about what happened during that year, right? So there was a very active and an aggressive bet on sorting that happened. All right. And let's spend about 10 minutes on Hokam's question. Okay. It's a serious question. Okay. So there was a very aggressive bet on sorting. Okay. Laser sorting. And I think due announcements in the website has been made on this, right? So at least a good part of 1 year was spent, monies, time, resources, board bandwidth, management bandwidth was spent on betting on the fact that sorting technology applied to processing and in the processing plant will indeed contribute towards increasing the head grades, which today exists between 0.6 grams to 0.9 grams per ton, to round about 1.2 to 1.3 grams per ton. So about, say, 30 to 45% increase, all right, from the present levels, all right? And that would be achieved by bringing the, by reducing down the waste that the processing plant processes, so that there is more gold output through the processing plant, thereby increasing the throughput of the plant. And the increased efficiency in the throughput of the plant will in effect increase the head grades to about 30 to 45%. All right. And once it's brought down to 1.2 or 1.3 grams, if you go down to the historical announcement done by Nordic Mines about 6 months back, there was a resource statement. A resource statement that the management had certified on the basis of sorting. Okay. And those numbers are there for everybody to see. All right. So, but the resource statement is a resource statement, and how much of those resources are actually economical reserves, okay, was left to be done, okay, because I believe that is the point in time where the FTR deal came in, which was about 3.5 to 4 months back. And for everybody's concern, I actually got a mail from a gentleman called John Arthur about 4 days back, saying that his bills have not been paid, and he was the guy who was involved in the resource statement as well, and would have been involved in making the reserve statement. And his reason was that I was told to concentrate on delivering all the data to FTR, and I don't know what's happening to that deal, and we have stopped the studies going forward. Okay, cutting the long story short and story made simple, is that I think the last management required round about 1 million to 1.2 million to do some intelligent infill drilling, all right, at hot spots, okay, in around the south pit, to figure out possible areas where they can extract out better grades, right? And that exercise was needed towards certifying out of the resources based on sorting that has been announced, okay, how much of that can be economically extracted out in terms of reserves, all right? And that statement is not there with us, All right. So I have asked Vinod Sethi that if at all I want to do rights, okay, and the statement has already, the written statement has already gone to the board as well. If I do rights, then the first starting point for me is to understand, okay, what is the management's idea of what could be an estimated reserve statement that can come out, out of, and believe you me, the rights issue that was supposed to be done, $1 million would have gone down into infill drilling to get those reserves upgraded. Okay, and that was a part of rights, and it will be a part of the rights issue if at all we do rights. The story that I've got is that the handover done by the earlier management has not been adequate enough, and that we should do a proper handover in terms of all the knowledge that was there in the earlier management coming onto the table as far as getting those getting a fair idea as to what the reserve statement is. So the way I see it, okay, is I think that the reserves, the resource statement that Legacy came along with was about 40% more than what FTR estimates. FTR estimates. See, these are numbers that have come down to me, but these are numbers which are secondary numbers. So these are not numbers which have any certification as yet, right? So so FTR says it's 600,000 ounces. I believe it was about 1 million ounces when Legacy was there. And I feel that what I have done from an investment de-risking model, okay, so when I was modeling my investment case, right, which was on demerger, I had always modeled my investment case on historical gold production. Okay, so if you go down to 2012 and 2013, these were the two active years in which Nordic Mines has produced gold. Right? 2012, I think they produced something like 1,100 kilos. 2013, they produced something like 940 kilos. And both the years, I believe the cash costs were highly inefficient, to say the least. So they were burning equity. Now, I have just taken those numbers and I have built up my investment case, that my investment case on demerging, okay, includes the fact that sorting should indeed be applied in the processing plant. You see, I was not for sorting right from day one, because probably I didn't understand much of it, and I really couldn't understand how a technology can basically give so much of efficiency that voila, you can get better EBITDA margins, you can essentially get free cash flows, you can all of a sudden solve all the problems in the world, right? And if that were the case, why didn't El Dorado do it? Okay, El Dorado was had invested $40 million into this asset, and they burnt all the money. All right, so why didn't they do it? Right. So, but the numbers that came out of after the management spent some active resources, management resources and money resources on sorting, and that credit should be given to Legacy Hill Resources, right? That the numbers that came out, okay, out of sorting indeed gave a very clear indication that it could for sure, if at all we put up a pilot sorting plant and what have you, the head grades can definitely be increased from today's 0.9 grams per ton level to around about 1.2 grams per ton. And that would indeed mean around about, say, 30% efficiency in the processing plant business, right? So my investment model, right, has included those numbers, has included the fact that we should do sorting, all right, and put up that plant, okay, number one. And over and above that, it has also included the fact that if at all we don't have a stress test scenario of profitability at around $1,000 an ounce. So in simple words, if the gold price is at $1,000 an ounce, if the business of Nordic Mines cannot generate enough safety margins at $1,000 an ounce, I would prefer not to be an investor in this mine. Okay. So my stress test was that if I have an investment model stroke a business model that can make the mine profitable, generating enough safety margins at 1,000, I wouldn't say 1,000, the right figure is $1,080 an ounce. Okay, at $1,080 an ounce, okay, then I want to be an investor, right? And that is how the demerger model came across. The demerger model is not based on generating safety margins at $1,300 an ounce. It is built in to bring safety margins at $1,080 an ounce. Okay, as an investor, I don't want to stay invested in Nordic Mines if there is no business model that can prove that there are safety margins available at $1,080 an ounce. And by safety margins, I would mean a reversal to the mean. That is, if suppose you have the mean reversion from $1,080 an ounce would be something like $600 an ounce of blended cash costs. So in the demerged model, if the blended cash cost, that is combined cash costs, is not $600 to $650, then I will not do the demerger model. But if there is any model, okay, that can tell me least of all FTR's model, okay, if FTR can elucidate very clearly, and not blasting and stuff like that, all right, quote unquote Krista Soderholm, who says that I can bet all my board of director fees if Blastic can take the head grades from 0.9 to 1.8 grams per ton. I mean, so I think that what we need to do is ask, taking Håkan's question, we need to spend that $1 to $1.2 million, do that infill drilling, okay, get those reserves upgraded, okay, and that will take probably a month or a month and a half, and we should do that, okay, and get a certified reserve statement onto the table. And it is my analysis that once you have done that, and that would once you've done that, if you apply the demerger case, okay, to the pre-demerger case, okay, the demerger case will bring the reserves, or rather upgrade the reserves even more, simply because the fact that your estimated cash cost, your blended cash cost, will be a lot lesser, and economic reserves is a direct function of what your production cost is. Okay, so Håkan, today what I can say is that my demerger model has taken roughly about 1,000 kilos of economical production into consideration. But I'm pretty sure, okay, that that if you apply the demerger case to the present case of 1,000 kilos annual, the demerger case increases this 1,000 kilos very seriously to around about 1,500 to 1,600 kilos, because the 1,000 kilos that I've estimated is at today's cost, okay, of around about $1,000 to $1,100 of cash costs, okay, whereas the demerger case assumes the fact that the blended cash cost will be something like $600 an ounce. So that, if that answers the question. But most importantly, I think the question is very relevant, because all the shareholders should be transparently told that what are the economical reserves that are there on the table, And I believe that this infill drilling thing, which costs about $1 million, will bring that certification onto the table in one way or the other. Okay, so the next question that has come on to me is, are there any questions, Håkan? I mean, do you want to ask a follow-up question onto that? I'll be happy to.
Yeah, there's one thing I was wondering. You know, the drilling test and everything. Haven't they done drilling test? Why don't the board already do that drilling test? Wouldn't it be interesting already doing it?
Yeah, of course it'll be interesting. I mean, it's a question of capital. Okay, I mean, if rights issue were to be done, if it were to be done, then the model would be an underwritten model. If it were to be done, right? An underwritten model after having what's NASDAQ's decision. You see, Lao Tzu was very clear that it would underwrite it before section 2.8. Okay. After section 2.8, I, like any other shareholder, would like to have that clarity from NASDAQ as to where do they stand, right? So presume and assume that NASDAQ says, okay, guys, do your rights issue model under a listed environment. Then I will underwrite the rights issue, right? Okay, and in which case the immediate $1 million will be available to Nordic Mines as of in a 72-hour basis. Okay, and the model that I'm talking about is already a known model to every bank. It is not something that I'm. This is nothing new. All right. So the rights issue was always supposed to be held in the same model. That immediate money goes into doing the infill drilling. So out of the underwriting amount, the money that goes into every bank's account, a part of it comes into Nordic Mines to do that infill drilling and get the reserves onto the table. Because the reserve statement on the table itself increases the value of the company from today's level. Only the reserve statement. You see, it's a very important question, Håkan, that you've asked. Okay, only the reserve statement. Forget the successful implementation of the rights issue. Forget the demerger model and all of that. The basic certification of what are the economical reserves, okay, under the ground itself jacks up the valuation from 0.285 SEK quite appreciably. Okay, so I doubt whether there should be any deal done, okay, with any external investor, okay, without having the reserves onto the table. And rights issue, and again that brings me down to the same question that I'm asking myself, that rights issue only increases the value of the company. For an external shareholder, it increases the cost of entry. So why should anybody prevent anybody to do the rights issue, okay, at the cost of some external investor who wants to do the deal, well, who wanted to do the deal at 0.285 SEK, and today both the papers suggest that even it's lower than this. Whereas I think a successful implementation of rights is going to take, my judgment, it's my valuation estimation, that a successful implementation of rights will take the stock prices to a mode level, okay, of something like 0.50 to 0.65 easily. Okay, and if that is the case, why doesn't FTR come down at that level? The definition of reserves that will come down during the rights process in about 1.5 months, spending $1 million would bring the stock prices to an appreciable level. Okay, so I really don't. I think it is a complete waste of time. Okay, to forget the FTR model, to discuss any external investor model without doing rights first. Because once you do rights, trust me, guys, trust me, all the shareholders, all right, you will have a lot of interest from many strategic investors on this asset. much more evolved, much more matured than FTR. Because A, you will have a reserves model. Okay. B, you would have proved your sorting technology. C, you would have liquidity into the marketplace. Then you have the time to make people explain as to where we are. And if you have a good reserves under the ground, you think FTR is the only external investor who's interested in this asset by putting in $20 million of debt and having a debt equity ratio of something like 0.8 million to 20? I'm sorry, 0.8 million to 30, because if it includes the cost of debt is actually $10 million more. So my feeling is that do the rights issue and parade the asset to as many strategic investors as possible. And you will see that at least 4 or 5 in the line. So today it is, today we are handicapped by not knowing what the reserves are. I mean, I as Lao Tzu can say, management told me that this could be the reserves. This guy told me those could be the reserves. That is not the way to handle this discussion or to handle any discussion. I think that certification needs to be made, and the rights issue will bring that certification onto the table. And we should go to external investors if need be, post rights. And my demerger model is exactly saying that. My demerger model is saying that yes, it is in total round about a $25 to $30 million fundraising, but we should do rights first. Bring external investors like this investor who will buy off the processing plant at a premium. So every single fundraising is at a premium. You see? So Håkan, the question can't be less important. It is the most important question that one should have, and I think we all should be concerned about Håkan's question. What is the economical reserves?
Is there anyone else who wants to address a question?
And also, I would like to say, if you have a question while Pranay is talking, you can write question in the chat.
Yeah. Malinda Allen Brand has said stock exchanges have rules for listing.
Yeah.
What are the requirements of Bombay and Dubai? Most exchanges will require a feasibility study. Has this been done? Malinda, it's a very potent question. Okay. And let me just answer you in a summarized way. Okay. I mean, we could go on and on with this. Nasdaq Dubai, Nasdaq OMX to Nasdaq Dubai should be automatic listing. Okay. For example, if we are listed in Nasdaq OMX and we want to get listed in Nasdaq Dubai, it is automatic listings because it's from one network to the other. The network is the same. The geographies are different. Bombay, I think that the due diligence and listing requirements are, they don't change very drastically from one exchange to the other. All right. Bombay Stock Exchange is one of the largest stock exchange as far as retail investors are concerned. The difference between Bombay and or Dubai or Sweden, okay, I'll just illustrate the difference. You see today, in my opinion, and upfront in a very transparent way, to attract talent from the Swedish market, and I'm specifically talking about board talent, not about operative management talent. Okay, I'm talking about board talent. If at all I go into the market, and that is the problem that I'm facing. You see, I'm facing that problem of attracting board talent into the company because it seems that there is such a lot of shit that has happened into this company, not this year, but historically over the years from 2011 onwards. Okay, that practically the entire Swedish market understands this asset in and out. Okay, there are very respectable mining resources available in Sweden. Very respectable. Sweden's economy has been built on mining. Okay, there is world-class, best-in-class talent of mining existing in Sweden. In fact, the Swedish Finnish gold mining cluster, okay, has most of course, I mean, most of them has succeeded migrating from exploration to mining. Whereas statistics say that most of the exploration projects actually don't succeed getting to mining levels. In Sweden, that's not been the case. So you can, the talent available in Sweden is top class. I've spoken to my network over here, and I have an extensive and a reputed network. Okay, people say, clean up the shit. Okay, clean up the liabilities, the debt, and what have you. All right, and some of them also agree to my demerger model. They say, yes, something new needs to be done. Okay, they don't 100% go down and put their neck on the chopping block saying that, hey, no, this is the thing to do. They say that it's an innovative way to figuring out how to solve the underlying problems. All right. The problem that I'm facing, Melinda, is that it's the chicken or the egg. Nobody would enter the board today. All right. The reason I'm saying that is because that is possibly the reason why NASDAQ is very uncomfortable. We are not being compliant in the board, okay? Because we're not being able to attract the board talent because there are some uncomfortable issues, okay, that the Swedish mining professionals have with Nordic. Let's call a spade by the name. All right. So again, I reiterate, it's one of the reasons that probably propels me. Okay, one of the reasons why it propels me. Okay, to go down towards Dubai or the Indian market, so on and so forth, because I can attract the talent, okay, from Dubai or Bombay, okay, into the board. As a result of which the diligence requirements that are required to be listed in these exchanges are met by me. Okay, so there is definitely the this so-called bias towards the Indian gold market because my network is over there. I can get respectable mining people and get the company listed in a diligent way. Okay. I'm facing a problem, okay, getting talent, okay, and it's not anybody will face a problem getting talent in over here, right? At the board level, at the operative level, and if suppose we were to be listed in NASDAQ, I have some names with me at the board level. One of them is the global group chairman of a very respected consultancy firm, which the gold mining industry looks up to. There is a Bain Consulting board member who has worked on demergers with the mining industry in a very extensive way, and today he is involved with the Russian mining industry. Okay, and he's essentially an operation excellence guy. That is, he specializes in extracting out cost benefits so as to decrease cash costs, and he has done it extensively over 7 to 8 mines. This global group chairman has been involved with many gold mines, right? I've got one of the resources who has been a financial resources with World Bank. So all these names are there with me. The reason why I've not been able to name them is because officially I can't name them till the point in time, A, I'm very clear where NASDAQ is headed towards, and B, I'm very clear where the board is headed towards. All right. So least anybody says that, Pranay, you don't know about mining and crap like that. I think that it's a team effort, okay, at the end of the day, and I have the resources that are available at the global level to come into mining, into Nordic Mines on demerger, okay, on demerger, right? Another guy who is who's already roped in is the guy who invented sorting with Tomra, Okay, Tomra is the front runner for distributing sorting technologies, and the gentleman who essentially innovated upon the sorting technology, his company was bought over by Tomra, and this gentleman is ready to join Nordic Minds. Okay, and so knowledge is no big deal, right? It's absolutely no big deal, right? At the operative level, I think we have to do with the operative talent which is available in the Swedish/Finnish market. I can't fathom a situation where I have to buy talent out of London or Canada or Alaska or USA or wherever. I think the mine is in Oulu, is in Laiva, and the talent needs to be Nordic in nature. And there is enough talent at the operative level as well. I won't name the company. There is a mining company which is listed and pretty near to Laiva, and the CEO has told me very clearly that if this is the case, then a lot of the operative bandwidth which is available, okay, with them can be sourced onto us. So I have names available for who should be managing the plant, who should be the mine engineer, and so on and so forth. Okay, but I think today the picture is slightly volatile. Okay, shove comes to blow, those names will be announced. So I think it's a pretty idiotic question to ask that Lao Tzu would be putting the dollars on the table without having a team in place. I think grant that stupidity, okay, to anybody else. Okay, I mean, I think I'm pretty matured enough to understand. I'm not going to put even $1 in this asset if at all I don't have a team in place. Okay, so does demerger require delisting from Nasdaq Stockholm? Yeah. It's a tricky question. Okay. Okay. Yeah. So theoretically, what happens is that when you have announced a demerger, okay, the next step is to present a demerger prospectus. A demerger prospectus, in simple words, the contents of which converge towards why and how would you do why are you doing a demerger and how would you do the demerger, right? The why you would do a demerger is always financial in nature, okay, and it basically goes on to prove that the sum of the parts is greater than the whole, which essentially means that one share of the mining business plus one share of the processing plant business ideally should be much greater than one share of Nomi business as it were to be today, right? So the demerger prospectus will lead towards giving transparent and analytical information by presenting two pro formas of respective balance sheets. It will be a pro forma balance sheet. Basically would say that what is the estimated picture of the two companies as far as the financials are concerned, and why the demerger thinks that 1 + 1 is much greater than 2. Okay, and that prospectus, and how will it be done? How will it be done? Will basically include asset transfers, right? It will include transfer pricing. It will include basically where does processing plant end? Where does mining end and where does processing start? The exact demarcation. Okay. So basically, the legal execution of the demerger will be the how part of it. All right. The legal part will also include who are the shareholders or who are the investors who would be buying into the processing plant, okay, and all of that, their credentials, okay, and the operative details as to how would it reduce down the blended cash costs and what have you. So once this demerger process, and it's a very detailed book which is prepared, okay, for the shareholders, and ideally it is prepared by one of the top fours, either Deloitte or KPMG or PricewaterhouseCoopers or an Ernst & Young, okay, who understand the business of operations, auditing, accounting, valuations, and they are essentially joined hands by a legal expert, okay, along with the investment banker. So these three bodies, the investment banker, a top four of the auditing firms, and a legal firm get down together in a sense, just like a rights issue prospectus, distributing and marketing the demerger prospectus. Now, why am I saying that? Okay, I'm saying that because you are creating two different companies with two different pro formas of one business, okay, normally, okay, in other markets, you take a court permission, a legal permission towards doing that, number one. And number two, post the court has given you the permission. I'm talking about other markets. Post the court has given you the permission, all right, you temporarily delist the company for close to about 4 to 6 months to buy that time to execute the demerger, okay, to prepare the demerger prospectus, the legal things and all of that, all right. So it is all baked into that 4 to 6 months, and post that 6 months, list the companies into the exchange. Till that point in time, your shares are frozen. It is not delisted, it is frozen, okay, just as the way it is frozen today at NASDAQ. All right. So and I see NASDAQ, which I've asked the qualified advisor. It's no different. It will be the same, right? Except for the fact that in NASDAQ Sweden there is no concept called voluntarily delist. There's no concept called temporary delist. Okay, the concept is replaced by what is called as voluntary delist. So what will happen is that we will tell NASDAQ that, Mr. NASDAQ, we want to do this because of two different sets of businesses that will be in future be listed in the stock exchange, having two different profiles and shareholders and different valuations. Please keep our shares frozen till the point in time we introduce two companies out of one company to you in about 4 to 6 months. Okay, so so the NASDAQ rules are the same as any other rules. Our stocks will remain frozen till the point in time we introduce two companies and apply for so-called new listing, and the frozen shares will be then taken off if the diligence passes through, and you will have two companies listed in NASDAQ. So if that answers your question. Okay, how much money is needed to start the mine? How will they be procured? According to me, I think that comfortably speaking, about $15 million, okay, in efficient capital structuring, which when I say efficient capital structuring would mean an equity debt ratio which is digestible and healthy, okay. And in my scenario, I would rather go in for more equity than more debt, okay. That is more risk than more debt. But even if at all one were to play it in the most flexible way, 1:1 capital structure, okay, that is 1:1 debt, 1 equity, would basically say something like $7.5 million of equity and $7.5 million of debt would in a sense be sufficient, okay, to market the mine or migrate the mind towards a production story, is my view, right? One way of looking at because this question is propped up, one way of looking at the FTR deal, okay, is in the present structure, whatever it is, okay, there could be many. Why doesn't FTR, if it does not want us to do rights, or if anybody does not want for us to do rights, why doesn't it put $7.5 million in direct equity? I think we should be fine with that. We are saying that we want to raise about $7.5 million in equity through the rights issue, right? So, and it's if it is about efficient capital structuring, and if that is what is making the FTR deal highly inefficient, okay, why don't we just simply tell FTR that, why don't you put $7.5 million of equity? If we are ready to put 7.5, why don't you put it? You'll get the shares for it. So why don't you increase the risk? We are ready to do that as shareholders. Why aren't you? So, because if he does that, I'm sure that the deal semantics will change. It will change in a constructive way. So this is another contribution as a shareholder to FTR. Why doesn't FTR increase its risk to the rights issue size of 7.5 million? Okay. In their $15 million model, $7.5 million risk capital equity, $7.5 million gold offtake loan. Simple. I'll buy it. Okay. So that answers the question. I think a good capital, when you ask the question as to how much money is required, I think a derivative question should be that under what capital structure is also important. So when I say $15 million, I would say $7 million of risk capital and $7.5 million of debt capital should ideally be sufficient, okay, towards proving that this mine can comfortably go towards production. Okay. Also, before, let me also, because this question is propped up, as a shareholder, I should also tell you what my motivations are. Okay, my motivations are very clear. My motivations are that I think that with the successful implementation of rights issue, we should be able to derive a capital structure of $15 million very comfortably. Okay, I mean, if FTR can do it, okay, I'm pretty much sure anybody who understands a bit of financing can do it. Okay, even a bit of financing can do it. Okay, and I think that what we should ideally do, okay, is conserve that $15 million, use it very stingily, use probably half of it, okay, to bring it down to a production story where you can prove your business model. And ideally speaking, okay, I think you should go on selling your equity at premium, okay, to investors who want to come at the demerger model. Okay, see, there could also be a scenario. Okay, let me be very transparent. You see, demerger, please understand that demerger does not happen on day one. It's not that you announce demerger and it happens in a jiffy. It does not happen in a jiffy. It does not happen, voila, you announce demerger and demerger happens tomorrow. No, demerger, the execution of the demerger will at least take about till the point in time you see the light of the day, will take good amount 6 months to 7 months. Okay, till the point in time you have taken the demerger model to a very matured level wherein the capital structure is ready, your investors are in, prospectus ready, all of that, right? I think that whilst you're in the journey of demerger, whilst you're basically spending the time of 7 months, okay, you will have enough opportunities, okay, of much bigger investors coming down into this game, who might I say, may not want to believe in demerger or want to believe in demerger. Okay, so if my point is very simple, okay, The demerger model, according to me, is basically proving to the investor community, to the financial community, that there is a model which can make this mine economic. All right? Okay. Now, for me to attract these guys, okay, is very easy once I prove the feasibility of it. Okay. I might not, as Lao Tzu, go down to the end limit of executing the demerger. It might be quite possible that a big strategic investor, okay, might buy me out in the journey. Okay, might say, hey, Pranay, okay, great model. We believe in this model. Your reserves are up. It's a fantastic model. Your economics are back in place. We are a big mine. We want to bring this under a portfolio. Why don't you sell me your 22%? We'll give you a good price for it. And believe you me, I will. Because that's the business that I'm into. Okay. So what I'm trying to tell you is that demerger is not happening today. Demerger is happening in 7 to 8 months. And between now to 7 to 8 months, we will have many opportunities wherein we can jack the valuation of the company many times over from today's current price, because all that you're doing is you're value creating. You're actually putting in embedded fundamental value for the real money to come in. FTR money is not real money. It is distress, it's super distressed money. Okay, and I fail to believe why should be super distressed money. Okay, so that should be a very important question, because I think this was also told to me by the last chairman. Vinod Sethi told me, Pranay, why don't you tell the board this, that demerger does not happen on day 1. Demerger happens in 7 months. Okay, and the board might be comfortable with that. They're not against your rights, but they're slightly uncomfortable understanding this demerger thing. All right, because in the journey to demerger, A, you have proved the economics of the mine. B, you've got the reserves upgradation. 3, you've got the liquidity. Come off it. Won't you get strategic investors? I said, yes, I will. But I will not say, okay, that I will not execute the demerger model, because that's exactly what I want to do. But in the process, if the strategic investor who comes down and says, great model, I want to buy at 22% at a super premium, I'll be a bloody idiot not to sell it. Okay, so let that be very clear. Let that be very clear that I'm over here to make money on my shares, and so should everybody be in this game to make money on the shares. All right. So that is where we are. Okay. So Matthias, yes, I completely agree with Matthias. I think this mine requires 6 months. I plead to the board and I plead to FTR that give us 6 months, and to all investors. I think we deserve that 6 months. We have lost good 3 to 4 months on rights. I would say in effect 5 months. Okay. Even if at all we would have executed rights at the time when the FTR deal came on, I think we would have been far better off. Okay. I clearly think with all conviction in my heart, okay, that when I see those papers, I can prove it in writing, in material terms, and legally, okay, that what was committed on day 1 has not been committed in these 2 papers, okay, at the end of the day. All right. So that 6 months has to be given to bring the right valuation of Nordic Mines onto the table. That will benefit everybody. Everybody. And I can bet every hair on my head that post 6 months of proper rights execution, okay, you will have far better investors at far better valuations. Today, that time is not being given to us. Time is being snatched out. Time is being snatched out. For whatever reason, some disturbance comes down. The rights should have been conducted long time back. Long time back. We are still on ground zero, struggling to do rights. Why? Because there's an FTR. Big deal. Big deal. Seriously. Okay. You mean to say that if there is enough reserves under the ground, if at all the demerger model can prove that the mine is feasible, okay, you mean to say that in a market or in an economy where an asset like gold, which I see no reason will have a bullish behavior in the next 5 to 6 years. Okay, I have no reason to believe that it will not. All right, you mean to say that financial investors and mining players will not be interested in a gold mine? I mean, come on. So give us that 6 months. I completely agree with Matthias on that. Completely agree. I think we should. I think the simple argument to the end of all of this is, FTR, we appreciate your deal. Give us 6 months. We want to do our rights. Can you wait? Simple end of all story. Give us 6 months. We want to implement the rights. We want to bring in the money in, and then we will address whosoever comes to us. If you are still interested, we'll entertain you with your $15 million and 1,937 kilos of offtake with 38% shaving off of revenues at $0.8 million and 60% equity stake. Yeah, so I think are there any other questions? Annalie, Nima?
There was one in the so I don't know if you addressed it.
There was one comment about the gold price. In 6 months, the gold price will probably be a lot higher than where we are today.
Well, that's. I think it's a. See, on the one hand, I think this, this is a favorite topic. I see, from a mine investment perspective, as a shareholder, I would be interested in basically understanding how the macroeconomic factors contribute to where the gold price would move. And from a macroeconomic perspective, the indicators do suggest very clearly there should be no reason why gold and silver, silver even more, should rise up seriously. Okay, but having said that, that is not an equation or a benchmark based on which I will risk model my investments. My risk modeling on an asset like Nordic Mines will always be on stressed out gold prices. My stress test case scenario, as which I think even a bank will do that. If you go down for a debt with the bank, a bank will have a stress case scenario. My stress test case scenario, which has also been derived from historical market data. You see, market gives you everything. You just need to be observant. Okay. If you have really understood how the price movements of Nordic Mines has functioned historically, you'll be clever enough to understand what the market is trying to indicate. The market is just trying to indicate one thing. Guys, give me a safety margin at $1,080 an ounce. If you can give me, my prices will be correlated to gold prices. Today, Nordic Mines prices are not correlated to gold prices. So, point being made is that don't concentrate. I think I would not focus too much on macroeconomic factors, considering, assuming that the prices will go up. There are good chances that the prices will go up, but the risk modeling on the investment case should be on $1,080 an ounce. And you always do that. Okay, fine. So if the gold prices go down to $1,500, it's great. I mean, believe you me, just as a historical data case for everybody's realization, the peak valuation of Nordic Mines was $600 million in 2011, with a cash cost estimation of $600 an ounce, with the gold price of $1,600 an ounce. So there was a built-in communicated guidance of $1,000 a margin. Why did Nordic Mines fail in its valuation pitch? Because it wasn't to be $600 an ounce. It was supposed to be $1,400 an ounce. And when the market realized that, your valuation broke off. It just came down, skyrocketed, came down where it was. You started burning equity, market started pricing in bankruptcy, and that's exactly where you are. But if you can bring a model which can bring down the cash cost to 600, 650 types, and the gold prices go down to 1,500 to 1,600, all the more better. You have a valuation which is as good as what existed. Discounted a bit, okay, because some gold has come out and so on and so forth. But yes, that bonus is yours, that upside is yours. Gold price increase is an upside. Okay, don't count your upside, count your downside. Okay, as an investor will count my downside, not my upside. Okay, gold prices are not what I can control, but cash cost is what I can control. So my business model and my investment model will always be on controlling cash costs. So if you can bring down a cash cost to a level which can make $1,080 an ounce of gold price, okay, if the gold price is $1,080 an ounce and you have cash costs which can generate enough profits, okay, then you should put your money on this mine. And if you can't, okay, then my advice, okay, should be that you should not. You should go down to Mandalay Gold Resources, put your money over there, okay, or go down to Boliden. Okay, I don't want to have a story wherein somebody says that today's gold price it is profitable. No. At $1,080, are you profitable? Tell me how. So that's that. So guys, you know, I mean, if you're I'm an investor and I'm not a speculator. Okay, so I will not trade my valuation out. I will stay my time, put my time, build up that valuation, and make my and cash out of, okay, out of creating my valuation. Okay, I will not trade my valuation out. Okay, I think that's an important. So don't consider to me a trader. I mean, I'm a long-term investor. I will say long-term and medium-term investor till the point in time I get the valuations that I deserve. All right. So point being made is that don't count on the gold prices. Okay, count on how you can reduce down cash costs. Fine. Right. So yeah. I think we are almost through. I think there is. Yes. I think. Yeah.
Yeah, but yeah.
Sorry, there was one question regarding the 3 billion market cap for the IPO, and maybe you could address that in the beginning tomorrow because this ends.
Another thing, I think we should, you know, for the sake of clarity, which I have recommended to the board yesterday. Okay, not to the board, to the chairman. Not yesterday. About I think about 3 or 4 days back. Okay, I had recommended him that he should be in touch with the last chairman, because you see my talks with FTR has been, you know, in upstarts. You know, I have always entered in to figure out, to make some sense out of this deal so that it can benefit the shareholders. Okay, so my entry has always been in terms of, you know, trying to figure out, you know, how can be creative in accommodating FTR, and in ways, you know, giving my 2 cents. But the source of this deal has come in from Legacy and thereby transferred on to the last chairman. So what I've told Fredrik Zettergren is that I think that the deal semantics of FTR has changed drastically. Okay, and this also has been agreed upon. Okay, very clearly by Vinod Sethi, who was in touch with FTR. Okay, and who says it categorically that the JV papers and the Pandion financing papers or whatever financing papers is not exactly what we talked. Okay, so I told Fredrik, don't, you know, I'm, you know, fine. So why don't you bring the guys who are there in the deal, who were the source of deal making, okay, to comment on all that is happening. And as of today basis, I believe if I were to save my, I want to, if I were to quote my discussions with the last chairman, which I can quote, he's very clear. He says that the writing is on the wall. We have to do our rights. The chairman, the last chairman who was actively marketing the FTR deal, was marketing the FTR deal on wrong expectations. Now he says that, hey, listen, this was not the expectation that I had. Pranay, please go and tell the board, do the rights. His only problem is that I believe that one particular guy in the board is not, or does not understand demerger. So he says that if at all you can really, get something around this demerger, the board is actively wants to do rights. All right. So my point is that I think we need to be extremely clear that, in my opinion, if there are, I think there are only two solutions existing today, as one were to see and analyze after seeing if there is rights is the only option. Well, with demerger, and what Vinod is saying, that I agree with you that rights is the only option, but and he's also saying very clearly that, hey, return whatever money is to be returned to FTR. I mean, he's boasting of the fact that he's put some $0.8 million, so he's shaken up the entire world, okay, and he wants to take 60%. I say, okay, fine. So here is a rights issue, and here's the $0.8 million. Okay, no, fine. So Pranay, no. We will legally do this, and we will legally do that, and we will legally do this. Come on, guys. I mean, let's be very clear. We're mature characters over here. Legal to legal. If you are legal, I'm bloody well legal as well. Okay, so my perspective is very clear. My perspective is win the deal on merit. Okay, if you don't win the deal on merit, go to legal. We'll meet you over there as well. All right, but today, win the deal on merit. Tell me what is my shareholder value, and tell every shareholder that these two pieces of papers that are yet not distributed, what is the shareholder value? Simple as that. Give me a figure to start off with, a guidance. If they were to come at the EGM, my focused question, a focused emphasis will be, spend your energies to educate me what is my value. And I will spend time in educating you, the board, and all the shareholders as to what is the value through rights and demerger.
I guess that's a good way of ending this session.
Yes.
It's 8 o'clock, and it's the same time and place tomorrow. And maybe there could be, this is just a suggestion, that people could maybe mail in or leave questions in the Facebook or in the VOOP to address in the beginning.
Yeah. All right.
It's a just one thing more. One of the promoters of FTR did mention that don't confuse on oil and gas. You see, I mean, sorry to say, I think Basil, if at all, you're still, I don't think so. You understand how to analyze investments. The very fact that there are benchmark examples existing. Okay, I think there is uncomfortability levels. Give me the name of the company which is there in TSX. Don't confuse oil and gas. Yeah, fine. Good positive signals. Good positive signals to the fact that you will travel the journey with me to understand the demerger works. Because it is not a theory that I've cooked up. These are industry trends. And you can't deny that when commodity prices are under pressure, which they are today, okay, you need to figure out far better creative. The biggest problem with miners today are they don't understand the science of finance. Simple as that. And the science of finance simplistically states at today's gold price, you just can't club the economics of the processing plant with the mine. because they're two different economics. One behaves like a bond, one behaves like an equity. Mining is risk, processing plant is bond. You can't mix, you can't kind of have, a combination of bond and equity and try to say, I'm going to turn it around. You have to separate it. And then try to have a clear picture as to how to kind of get the economics in place. That's what oil has done. When you say don't confuse, it is a picture, it is an industry trend. The oil industry has proved that 1 + 1 can be equal to many times more than 2. This gold mining company has proved that the valuation is indeed only the processing plant is valued at around about 1 SEK. And don't ask me for the name because the name will be given off at the EGM. It will be given off. Okay, till now I've kept it as confidential for very clear reasons.
All right. Well then. Okay. I will. We just put an end to this webinar.
All right.
Thank
cool.
you.
Are we through?
Yeah, we are through.
Yes.
So thanks a lot, guys, for coming down. It was nice to have passionate shareholders coming down and understanding that that the shares are of indeed value in this mine. Okay, and the value needs to be unlocked. Okay.
Yes.
So thanks a lot for coming down and spending some time with me. Thanks a lot.
Thank you too.
Yes, thank you.
Bye.
Bye bye.
See ya.
Bye-bye.
Thank you, Panda.